Let's analyze NIO stocks. What's happening with them? Let's make sure to look at the volatility, which has been dropping significantly. We'll consider the factors related to this, and I'll show you. We'll also look at the market forecast for this company. I'll also demonstrate a strategy that could allow you to make a profit, whether the stock drops significantly or starts rising sharply. Let's start from the very beginning. NIO reported its unaudited first quarter 2024 financial results, revealing a mixed performance. Total revenues for the quarter were 9,908.6 million yuan, $1,372.3 million, representing a 7,21,160.8 million, marking a 9.1% decline from the first quarter of 2023 and a substantial 45.7% drop from the fourth quarter of 2023. Despite these declines, the company managed to achieve a vehicle margin of 9.2% in the first quarter of 2024. Showing improvement from 5.1% in the first quarter of 2023. Gross profit reached 487.7 million yuan, $67.6 million, indicating a notable 200.5% increase from the first quarter of 2023, albeit a 61.9% decrease from the fourth quarter of 2023. These financial results reflect NIO's ongoing efforts to navigate market challenges and enhance operational efficiency amidst evolving industry dynamics. For the second quarter of 2024, NIO has provided the following forecast. Deliveries of vehicles are expected to be between 54,000 and 56,000 units, representing a substantial increase of approximately 129.6% to 138.1% from the same quarter of 2023. Total revenues are projected to range between 16,587 million yuan to $297 million and 17,135 million yuan, $2,373 million, indicating a significant increase of approximately 89.1% to 95.3% from the same quarter of 2023. These forecasts demonstrate the company's optimistic outlook for the upcoming quarter, anticipating notable growth in both vehicle deliveries and total revenues compared to the corresponding period in 2023. Of course, the results aren't great, but if we look at the long-term potential and the development of electric vehicles, one report is definitely not a definitive indicator. However, the company remains unprofitable in many categories. Let's look at the volatility and see what's happening there. As we can see before the earnings report, the volatility increased significantly, reaching almost 100%, and for some strikes, volatility went up to 120%. This is an absolutely normal situation. Volatility usually increases before an earnings report. Currently, the volatility has dropped to 70%. The range of expiration dates is from 60 to 80%. I remind you that different expiration dates provide different volatilities, which is a normal situation. Now let's look at the volatility smile. We can see that the volatility smile for the nearest expiration dates rises towards both the increase and the decrease in stock price. This means investors and traders are pricing in both growth and decline of the company. Call and put options for closer and midterm expiration dates are priced similarly. However, if we look at longer expiration dates, volatility does not increase in the direction of price increase, but only in the direction of price decrease. Again, this is a normal situation because investors and traders hedge their positions by buying put options, which makes put options more expensive than call options. Now, let's look at historical and implied volatility. What's happening here? As we can see, the gray line represents historical volatility, and the white line represents implied volatility. We can see that volatility is currently at different levels, with some intersections at certain points. I always say that you can trade not only the stock itself, but also volatility. How to do this? This can be done through derivatives such as options. I'll show you an example. This is just an example to help you understand how it can be done. For instance, let's say we expect that in mid-August, the stock's volatility will increase, and using artificial intelligence, let's calculate various strategies ourselves. We will choose just one of the proposed strategies. I suggest selling a put option with a $6 strike for August and buying two put options with a $5 strike for the same month. This strategy for August is quite interesting and looks like this. We can compare this with other strategies for efficiency. However, I prefer to manage the strategy, not just open it. To manage the strategy effectively, that is, to buy and sell options at the right moments, you need to understand the logic behind it. Why are you opening it at all? I look to artificial intelligence for help only to get ideas, but I never just follow its suggestions blindly because I develop my own logic for opening positions. Now let's look at the levels of resistance and support. As we can see, we have huge volumes around the $5 level. This is concerning call options, and it has become a very strong resistance now. We also have large volumes at $5 and $4.50 5 put options. So at the moment, I suggest everyone keep an eye on the $5 level, especially for call options, because all the market makers who sold options need the stock to stay above $5. That's why there's a dip, a decline in the stock. But sooner or later, this configuration will change. Possibly positive news will come out, and we will be able to overcome this level and start growing at a faster pace. Now let's get back to NIO stock. After the report, there was a 10% drop, but I remind you that I can't predict the price movement. I don't know where the stock will go. My main task is to manage positions wisely. You should form a portfolio so that you make money no matter where the stock goes. Now, I will demonstrate this to you. Here is the strategy I built. As we can see, if the stock starts to fall significantly, we will make money from it. If the stock goes bankrupt or starts rising significantly, we have unlimited profit potential. Here, the sale and purchase of options, both call options and put options, are used. The strategy is not simple. I must say that it also needs to be managed to minimize any losses. So at the right moment, sell options, and at the right moment, buy options. But again, if you don't want to bother with this, you can simply buy the shares and observe. However, I enjoy managing positions wisely. I like structuring and constructing various strategies, focusing on potential risk-to-reward ratios and earning profits from that. Now, let's look at the market forecast. As we can see, by August 2024, the stock is most likely to be between $4 and $5. Here we have a 30% probability. This means the market is pricing in all the available information at the moment. This range reflects the current state of the stock, neither a decline nor a rise. Although typically the market expects a decline in stocks, the situation here is different. We can look at more distant expiration dates, and the situation remains the same. For September, the highest probability is that the stock will be between $4 and $5, and the market doesn't expect a significant deep decline in this stock, which is good. But again, this information only reflects current news. If new information emerges, the market will reassess the entire structure. The fact that the market doesn't price in a decline is already a very good sign, indicating growth potential. I suggest that the first target for the stock could be $7. However, it's important to understand that this won't happen immediately. There is significant resistance, and it could take a week, a few months, or even after a deeper decline before the stock potentially rises to $7. This represents at least a 50% increase at minimum. If the company shows better reports and good news comes out, the stock could rise even faster. As we saw in 2020, the stock grew by 2,000%, and such events could repeat, but it requires patience. Don't expect profits within a week or a month. If you're investing for several years, this is a good strategy. However, I don't recommend putting all your money into one stock, because it's too risky, especially in a stock that is currently unprofitable. I particularly like working with such stocks using options. In addition to short-term strategies that I've built, you can also create more long-term strategies. For example, buying call options for the end of 2025 or mid-2026. These call options are not expensive and effectively serve as a substitute for holding the stock for several years. I don't recommend buying near-term options. I also remind you that the company is dependent on trends, such as the electric vehicle trend, but all trends also evolve in cycles. As we can see, the electric vehicle trend peaked from 2020 to 2021, during which Tesla reached its historic highs. Similarly, Tesla grew by thousands of %, and even such a company couldn't maintain those levels after the trend passed. Currently, the trend is artificial intelligence, as we can see with Nvidia. The trend started in 2023, and its stock is also growing by thousands of %. Sooner or later, this trend will end, and I believe electric vehicles will eventually return to the headlines and become more active. The key here is not to rush but to approach positions wisely. I also remind you that I have started a brand new portfolio, a new experiment where I will publicly review a real portfolio. All the revenue from YouTube and advertising will go towards funding this account. I plan to record a new video next week explaining which specific stock I will be buying and why I chose that particular stock. You can see the portfolio I'm building and follow the same logic if you wish. Everything will be as transparent as possible. Again, the portfolio is starting from scratch. For those who want to begin investing from scratch, you can watch how I do it. A new episode has already been released, where you can see what I talk about and why certain decisions are made. If you have any questions about it or other companies, feel free to write in the comments. Good luck to everyone.